This is Business Incorporated coming to you live on Channels Television here in Lagos, Nigeria. And we're glad to have you. I'm Chimezi Obi Iwago. Coming up on the show, Central Bank of Nigeria and the People's Bank of China signed $2.5 billion currency swap agreement. Guinea's economy expands by over 8% in 2017. Plus, MTN Group reports 9.1% jump in its revenue for the first quarter of 2018. Let's get the show started now with the markets. And here on the African continent, the markets are all bleeding at intraday, with Egypt seeing the largest loss of 1.64%. The Nigerian All-Share Index was down 0.18% at midday, while the JSE Index was also 1.01% lower. Kenya lost a whopping 2.06% on Wednesday. And it's the same story out there in the Middle East, where all the markets were in the red at intraday. The Abu Dhabi index was down 1.69%, while the Dubai index lost close to 2%. Dubai is stabilizing after being weighed down by property stocks due to the Emirates' weak real estate market. In Qatar, the benchmark index fell 1.65% in early trade, weighed by blue chips. The Saudi index was 0.12% lower at midday, as valuation concerns kept some of the blue chip stocks subdued. Saudi Basic Industries was down 0.4%. The Saudi index has eased off from a more than two-year high hit last week and consolidating at current levels. Shares of Emma Properties were up 0.5% in early trade, although Dubai's benchmark index was flat. And in Europe, equities moved lower in early trade as investors digested new earnings reports. So let's cross over now to Frankfurt, where my colleague there, Ulrich Barth, is standing by to tell us more about today's trading. Hello, Ulrich. Good afternoon. Good to see you again.
Hello, good afternoon to you.
Now, the Fed in the U.S. did not raise rates yesterday, but still managed to spook the markets with remarks on inflation. How is that being digested today?
Yeah, the shares are still going down after Wall Street went down. Also, as a consequence, the share prices aren't losing a great amount, though. The euro getting also a little bit of an impression on that. But now analysts seem fairly clear that with this statement from the Fed that it released after the meeting, that there will be 4 interest rate hikes in the United States instead of 3. Now, that sounds like a trifle. You know, what's the difference between, let's say, 0.25% or 0.5% more at the end of the year? But for the markets, that is a big difference. The U.S. dollar is the main financing instrument for the whole world economy, for the markets. It's the benchmark, if you will, especially the U.S. Treasuries. And, of course, the Fed interest rates are key to that. What's, I think, mitigating the effect on the market, that there will be perhaps higher interest rates than one assumed so far, is the fact that it's combined with a relatively upbeat background, namely that inflation is going up, it's meeting the Fed target, but the Fed makes clear that it doesn't really see an overshooting of that 2%, at least if it does not for long. So there's a good economy that goes along with higher rates, and that's good for partner countries as well.
Okay, let's take a look at the car industry. Still staying in the U.S., Tesla produced another huge quarterly loss. Now, the stock taking a hit after the news. Elon Musk reacted harshly to analysts' critical questions. How did that go down with stock market people in Frankfurt?
It didn't go down at all well. People were very surprised, and I think some people were also shocked to see Elon Musk, basically like a schoolboy, repel questions that seemed probably a little bit too critical for him. He said they didn't sound cool, these analyst questions. They sounded dry. He made clear he didn't want to occupy himself with something like that. That is not the way a CEO is supposed to behave, especially a CEO of a company that has posted losses for years and that is burning up cash at an ever-increasingly alarming rate. The share is going down by 6%. Tesla is not expected to go bankrupt anytime soon, but certainly the market is getting more and more question marks on whether this company will ever turn a profit, even when it's manufacturing cars as expensive as they are, with price tags that allows ample profits for other competitors like BMW, Mercedes, Audi, you name it.
Well, Ulrich, I guess I agree with you on that. That's not how a CEO should actually behave. Anyway, let's look at Volkswagen there. The company is holding its AGM in Berlin with a new boss, Herbert Diess. Is he going to help VW finally overcome the diesel scandal?
I think he's a much more convincing figure for a step into the future, both in terms of the company culture and also in terms of what's needed technologically to make the next step. And Volkswagen is investing huge amounts of money, billions, to make the transition from combustion engines and cars where you hold the steering wheel, and however fun that might be, to self-driving cars. He makes a much more convincing case that he's interested in it himself, and that he's driving that kind of movement along. With the culture change, he did say today at the annual general meeting that he would like VW to be more open, truthful, honest, and in short, more decent. But of course, he has an uphill battle because he's still surrounded by the environment that made the diesel scandal possible, and that made it impossible for his predecessors to stay on. A very powerful works council, that is, workers who understand themselves as co-managers. A political influence through the state of Lower Saxony, that's a province here in Germany, which owns about 20% and can basically veto any decision, and a very strong family share ownership.
Well, we wish him luck as he drives this auto company. Thank you very much for your time, Ulrich. See you again tomorrow.